Hello everyone, I am Pratap here. We are going to generate demand and supply zones for end of the day 7th December 2023. The main theme of today's session is how to do complex analysis with proper observations. If any of you are attending this session first time or visited our channel first time, please understand we are providing a free training on supply demand zone price action course. You can access all these videos related to this training program by visiting our homepage. You can click on the homepage and then scroll down to the playlist supply demand zone price action course. So click on this playlist, and in this playlist you can find all the videos related to this training program starting from lesson 1.1, 1.2, 1.3, lesson 2, lesson 3 until the most recent lesson. Even all the upcoming lessons related to this training program will be placed under this playlist. And we are also providing the link to this playlist in this YouTube video description. You can also access the link by visiting the description of this YouTube video. Now let us get into our main discussion. And look into this Nifty 50. Currently Nifty 50 is forming a base. See, this is a hidden candle, hidden leg-in candle, because it is having a gap with the hidden body. So this is a leg-in. After that we have two base candles, and we need to observe what is going to happen, because we never know. It is going to be a rally, the leg out is going to be a rally candle or a drop candle. Those two possibilities are there. Third possibility is also there, and keep on creating the base candles. Some kind of consolidation in the market. Okay, this is about Nifty 50. Now the main theme of today's session is how to do complex analysis. So we have good stocks provided a very good profit, that is IPCL Lab, Bajaj Auto and Zendal Steel from this list. But even before that, let us look into the stock State Bank of India. And this stock is going to help you how to understand a complex analysis with proper observations. And look into this stock on the daily time frame. We have a rally candle, and we have 4 base candles, or even 5. Even leg candle are also part of the base here, and then we have a drop candle. And this is a high liquidity zone we identified from our yesterday's list. Okay. So what is how we analyze the high liquidity zones? Always we go one step lower. That is 75 minutes time frame. In the 75 minutes time frame, you need to identify a fresh zone, a 75-minute zone. Okay, this is a 75-minute zone. We have a drop, 2 base candles, and again a drop candle. This is a hidden candle with hidden body. And we have follow-through candle, again one more follow-through candle. So we have identified a fresh zone, because most of the times these fresh zones will be having a high risk. In order to reduce the risk, what we do, we go down one more time frame below, that is 15 minutes time frame. And inside this we identified a a 15-minute zone. We have a rally candle, and we have few base candles and a drop candle. Because the risk is high, what we did, we again further fine-tuned by going to the 5 minutes time frame. So inside that 15 minutes time frame, again we identified a rally candle, base candle and a drop candle. And moreover, this is a 5 minutes high liquidity zone which is supporting multiple tests. This 5 minutes is a high liquidity zone. So that means we can expect more than one test in this particular 5 minute zone. And how we are able to identify? By doing top-down analysis, starting from our high liquidity zone. Generally, we do top-down analysis starting from monthly time frame, but here we are limiting our top-down analysis starting from our high liquidity zone, because high liquidity zone itself will give you good results. That is what we observed for the last 2 months. And all these points, moreover, you already learned. Okay, now what happened to this stock? And it is already given one more test. Previously it has given 2 tests. This is the 3rd test when it has given on Wednesday. Again on Wednesday it has given one more test, 2nd test. And finally on Wednesday at 1 o'clock it reached the 15 minutes target. So all these things happened during our previous trading day. In today's trading day, in today's trading day, what happened in the previous trading day, we are discussing. And again, once again, if prices get into this zone, maybe it may work, because it is a high liquidity 5-minute zone. Okay, now what about today? Today, does it reach into this level? No, it didn't reach into this level. That means we feel there is no trade in this stock today. That is what we conclude, right? But if you do a complex analysis, that is not the case. You will find even some more opportunities when prices entered into this high liquidity 5 minutes area. For that, you should not forget the basic concepts you learned about our high liquidity strategy. What is our high liquidity strategy is saying? Always we need to look for a fresh 75-minute zone inside the daily high liquidity zone. But is this 75 minutes is a fresh zone? No, it is not a fresh zone, because it is already tested multiple times, because this 5 minutes is again acting as a high liquidity zone. But today prices didn't enter into this 5-minute zone. That means, have we missed the opportunity? Definitely we don't, because we have to do a proper analysis. That is what I am saying. Complex analysis means doing proper analysis. Most of the time, our analysis is not proper. And the day when we do proper analysis, we feel that is a complex analysis. Actually, it is not the complex analysis. If you remember all the rules, then instead of saying complex analysis, we can say that is a proper analysis. Don't forget the fundamental rule. What is the fundamental rule? Always we should look for a fresh 75-minute zone inside daily high liquidity zone. Because the daily zone is a high liquidity zone, it is having the capability of creating multiple 75-minute zones inside daily high liquidity zone. So that's why go to the 75 minutes time frame again. So here we already created a 75-minute zone, but on Wednesday, prices entered into this zone. Is any fresh 75-minute zone is available here? Looks like there is no fresh 75-minute zone, right? But actually there is a fresh 75-minute zone is there. How? By using the concept of hidden zone. Hidden zone concept is the most important. You already learned. Whenever there are hidden zones, most of the time they work very well. So a new hidden zone is created. How to identify? Just expand, zoom this, you will get clarity. See here you have a candle, looks like a base candle. This candle is also looking like a base candle because it is not having good body. Now there is a gap. From here you just add the body. If you add the body, let me show you. Where is the rectangle here? Okay, here let me add the body. This trading view is not very good in drawing the rectangles exactly under this, but anyway, just assume. See, now we have added this hidden body. Already the existing body is there, so let me a little, yeah, see. Now how this candle looks like? Is it not looking like a leg candle now? On the top of that, there is a wick is also there. Completely now you can accept this is a ERC candle, expanded range candle. And then you have a base candle. And then you have a drop candle. That means this is a drop, base, drop. This is looking like drop, base, drop. Actually, it is not drop, base, drop. This is looking like a rally because prices are moving up. I have to change the color of this candle. Then you get better clarity. Now you look here. This is the body, and let us assume rest is the wick. Now you have a rally candle, base candle, and a drop candle. That way you can understand this pattern. If that is the case, what you can do? Just delete this. Now let us draw the 75-minute supply zone. See, now a new 75-minute supply zone is created. Let me delete the, no, let me keep because again now. Okay, this is the new 75-minute supply zone. So because the risk is high, what you have to do? Go to same procedure, go to 70, inside 75 minutes, find 15 minutes, inside 15 minutes, find 5 minutes. That is the standard procedure. So what I am doing, from 75 minutes, I am going to 15 minutes time frame. In the 15 minutes time frame, here I am finding you have a ERC candle and then base candles and then a drop candle. I can draw a zone something like this. This is a 15-minute zone. Okay, to bring clarity, let me delete this 75-minute zone for time being, the newly created 75. Now we got the clarity now. See, now we have a 15-minute zone. See, with the gap, there is a gap. This is a big rally candle. And again, this is also another ERC, failed ERC candle. The failed ERC candle can be used as a leg-in purpose. And then you have true base candles, and then again we have a drop candle, and because there is a gap is there, some more body you can add. By considering all these things, and moreover this 15-minute zone is again a high liquidity zone. It is supporting multiple tests. This is the first test, again second test, again third test, again fourth test, again fifth test, again sixth test. It is supporting multiple tests. This is a 15 minutes high liquidity zone. That's why prices didn't go beyond this. And today, the prices didn't reach into 5-minute zone area because this 15-minute zone below the 5-minute zone is acting like a high liquidity zone, 15 minutes high liquidity zone. 15 minutes high liquidity zones are not allowing the prices to go up. So this is the point we should observe. Okay, before we draw this, in this 75-minute zone, we have one more high liquidity, one more 15-minute zone we can identify something like this. This is again a leg candle. We have two base candles, and then again we have a drop candle. So this is the way we can draw. And again we have one more candle inside this 75 minutes, one more 15-minute zone you can draw something like this. And if you look into this 15-minute zone, high liquidity 15 zone, and this 15-minute zone, both are overlapped each other. So this is LOTL concept. Time being, to bring clarity, let me delete this. So totally how many 15-minute zones are there? We have two 15-minute zones. This is one 15-minute zone and this is one 15-minute zone. And both are inside newly created 75-minute zone which we have deleted. What is that newly created 75-minute zone? Let us look into this. See here. We have a rally candle, we have a base candle, and we have a drop candle. That means we would have drawn our zone like this, the one we deleted. This is the 75-minute zone. This is the one we deleted. Inside this 75-minute zone, we have one 15-minute zone, and inside this 75-minute zone, at the distal line of the 75-minute zone at the edge, we have another 15-minute zone. These two are two main zones. Okay, why I am talking about these two zones? Because today we got multiple opportunities. Now let us get into the 15-minute zone, you will get clarity. So this is the 15-minute zone and this is the another 15 minutes high liquidity zone. And generally what we do, we will try to minimize the risk. For that we go to 5 minutes level. In this 5 minutes level, we have a 15-minute zone drop, base drop at the distal line of this. This is the way you can draw because it is already, you may say it is already tested. Because it is already tested, what you can do? The fresh 15-minute zone you can draw. Here one more important point you will be learning. Okay, this fresh 75 minutes is also already tested, you may say, but this test is today's test. This is yesterday's data. Yesterday at 14:45, we have a rally, base and drop. Let me delete this 15 minutes to bring better clarity on this discussion. This is a 5-minute zone. Inside the 15-minute zone we have deleted just now. This 5 minutes is there. Inside the 15-minute zone we have deleted. That 15 is inside this 75-minute zone. That is also we deleted sometime before. You may ask a question. Okay, there is a rally, base and drop, but this drop candle is not very clear. This is a ERC candle, see here. But look, it is almost a failed ERC candle. Can we accept? Yes, we can accept, provided there is a follow-through candle. Is there a follow-through candle? Yes. Because sometimes your leg out may not be looking like an acceptable leg out. But you have a follow-through candle, definitely you can accept. This is one more important point you have to observe. Because there is a follow-through after this leg out. This is a ERC candle, not having a great body, but still we can accept because it is having a follow-through candle. And most of such kind of zones will work very well. At least one test it will give. See how institutions are trying to divert our attention by making sure creating zones not really convenient to us as per our supply demand zone price action theory. Whatever the concepts you are learning in the price action theory, because you are a beginner, in a perfect way, whatever the concepts are there, you are learning. Whenever there is an imperfection, you are simply ignoring. But actually, institutions are focusing on those areas. So that's why you should be very careful. So far, you learned basics. Now, this is the time you need to understand these complex scenarios. I have seen many scenarios. Such kind of zones work very well. When I draw a zone, sometimes you may feel like, okay, this zone is not convincing. But I convinced it with the zone, and that zone worked very well. You have seen many such kind of zones during our analysis part. How they are working? Because institutions' focus is like that. See, we should also adapt accordingly the way how institutions are thinking. Then only we get success in the trading. First of all, this is a ERC candle. You will accept, no doubt in that. But to consider this ERC candle as a leg out, you have 100 questions in our mind. For that, I am giving you one clue. What is that clue? Look into the follow-through candle. If you find a follow-through candle, then no doubt you accept that zone. Mostly 90% scenarios, that zone will give you a result. See, today what happened? Today morning, prices entered into this. After that, it reached this 15 minutes target, which we have already seen previously. This 15 minutes zone is holding the prices. See, yesterday it has given that, yesterday prices from this high liquidity 5-minute zone, it pushed up to this 15-minute zone. 15-minute zone holded the prices. And today, our newly created this 5-minute zone, inside the newly created 15-minute zone, inside the newly created 75-minute zone, the newly created 75 and 15 minutes we have deleted to bring better clarity to focus on the 5 minutes. So today it reached, and again it entered into the zone and reached the target. Do you know how much profit it has given? 6,300 rupees in just 15 minutes of the first hour of the trading, and which is 3.85%. Okay, the ROI is 3.85% for one future lot. Maybe it is lesser than our average intraday ROI for one future slot. I will agree with that. But still, within 15 minutes, 3.85% ROI is an excellent ROI. And not only that, today it has given one more trading opportunity. The 15 minutes zone we have drawn. This is 5 minutes inside the 15 minutes we have fine-tuned. And this has given one more opportunity today. See, after that, after this first test, see, easily it is failed. We have let us delete this. And what about this 15-minute, this 5-minute zone, which is inside 15? This is at the distal line of the newly created 75 minutes. Actually, the newly created 75 minutes is broken, but this is just above that. This is also acting like a trap. Which trap? Bull trap. Why? Look into our 75-minute zone we have deleted. Let me draw that zone again. So here we are adding a hidden body. So it's looking like a rally candle, then base candle, drop candle. Let us draw the 75-minute zone. $125 or 75 minutes supply zone. See, this zone is violated today. Why it is violated? Because it is already tested once. See, after that it is tested. 3 times rejections from this, and the 4th time it is completely violated. But along with this, on the top of this 75 minutes, there is a 5-minute zone which is inside the 15-minute zone. And this is acting as a trap, because if anybody focusing only on this 75-minute zone, because it is violated and people are exited, let us assume, because stop loss is hit. But all these stop loss exit orders, that is long orders, are captured by this supply zone, this 5-minute supply zone. That's why this is also acted as a trap, bull trap. Now let us go to the 15 minutes time frame. Okay, now we got an entry. Second entry we got. Sorry, here. Here we got the second entry. Then what is our target? Target is 15 minutes. Is it reached this 15 minutes? No. That means, have we failed? No, we didn't fail. There is one more newly created 15 minutes. Always you should look for the most recent 15-minute zone. That is the target. Now you draw the demand zone, the new 15 minutes demand zone. This is a revised compared to the previous one. The reason is there is one more new 15-minute zone is created, rally, base, rally. This is going to be our target. And this is the entry, and finally it reached the target. But here, one point you have to observe. The target is, the risk is high here. Probably you are getting only 1:1 reward, or little over 1:1, or maybe 1:1.5, something like that. So for that, what you have to do, go to the 5 minutes and fine tune this 15-minute zone in a much better way. So how we can fine tune? See, here we have a rally, we have two base candles, we have one base candle and a drop candle. Like this you can draw. But you may not be convincing this is a drop candle. That's why I told you, if there is a follow-through candle, you can consider. Still the risk is high. What you can do? Type 3, you can accept type 3. You have a rally candle, you have a base candle, and then we have a drop candle. Because this drop candle is not convinced, look into the next candle. There is a follow-through candle. Again another follow-through candle, another follow-through candle. That's why I'm saying this is a complex analysis, because your mind should think in such a way. You should not, certain candles, you should not compromise as if it is a base candle. Generally in base candles, what should happen? Prices should move in a narrow range. Maybe there could be some difference, minor differences, up and downs, above the candle or below the candle. But see here, completely it is a drop candle. The next one again it went down. Maybe prices came back later. Next one also. That means immediately your mind should think, maybe this is not the base candle. This is a leg out candle, because from the zone it is prices are coming down. And when you get clarity to confirm this is really a zone or not, go to the further lower time frame, 3 minutes time frame or 1 minute time frame. You will get clarity. If you go to 1 minute time frame, now see here. Now definitely you will convince. You have a rally candle, you have a base candle, you have a drop candle. Don't you agree now? Yes or no? That's why I'm telling, understanding in a complex analysis is more important than doing your analysis in a simple way. All these days you are doing your analysis in simple way. Now learn how to do complex analysis with proper observations. Already I introduced how to look into 1 minute charts in the previous lesson. If you have gone through the previous lesson, that is yesterday's lesson, definitely there is no difficulty for you to understand today's session. See, most of the time, every session I am introducing some themes, not only to show you the trades, but also to give you some advanced learning, most of our analysis videos, I'm introducing some themes. Today I clearly told you what is the theme of this session. Every day when we get into a specific stock, at the time I'm telling you what is the theme. But anyway, see here, what happened in the 5 minutes, clearly you have seen. So that is because we are limiting to the 5 minutes level. Now, accepting type 3 is allowed here. What is type 3 entry? The highest body of the base candle. How many base candles we have? One base candle. So this is the highest body. After that you have a leg out and you have a follow through candle. Maybe you are a beginner, you reject this zone because the leg out is not very great. But as an experienced person, you don't reject this leg out because there is a follow through candle. You consider both the candles together and you will accept this as a leg out. That kind of understanding is important. At the time of learning, you don't really bother. You mainly focus, okay, what is leg in, what is base, what is leg out. Follow through candle, you don't consider at all, or most of the times. But in advanced learning, if your leg out is not great, always look into the next candle. If that is a follow through candle, definitely consider the previous candle as a leg out, even though that is not a great leg out candle. And such kind of zones work most of the times because institutions are somewhat, they are going beyond your actual understanding and then they are creating their pending orders. Why institutions are doing like that? Because people are learning supply and demand zones. They are understanding they are following the institution's footsteps and they know where institutions are placing orders. Just before their orders, you are placing your orders. Due to that, are they facing any problem? They don't face a great problem, but at least some of their pending orders are consumed by your orders. They don't want any disturbance from us. That's why they are looking for a new methodologies. Those new methodologies we have to understand properly. That is what I explained one scenario in this example. This concept is very, very important. If your leg out is not really a great leg out, always look for the next candle, the follow through. The next candle is a follow through candle. What is follow through candle means? The previous candle is a drop candle, the next one also should be a drop candle. Or if the previous candle, the leg out is a rally candle, the follow through candle also should be a rally candle. If such kind of structure is there, you can accept that leg out, even though that is not a great leg out. This is one important point I want to convey. That's why I'm saying we are doing a complex analysis. Actually, it is not complex analysis. Observing properly, the price action observing properly, you are doing your analysis. Because you are learning new points now, it looks like a complex analysis. Once you learn, I don't think it is a complex analysis. Hope you understand. Okay, why we reduced? Because we want to minimize the risk. Now, the moment you minimize the risk, two advantages you have. One is your risk will be less, that means your stop loss will be less, and your reward also will be improved. These are the two things. Okay, but what is the disadvantage we have? Sometimes we don't get the entry in this zone. See here, previously here. Have we got the entry here? No, we didn't get. Just before itself, prices came down. That kind of risk will be there. But if the risk is increasing, that will hurt our profit margins. If anything happens in a wrong way, or sometimes you don't get reward also, that way also you don't take trade. Okay, now what happened? We got the entry. Just we got the entry. This is the second entry. Prices, see the rejection after that. Now what about our target? We have already drawn a new target. Sorry, let me go to 15 minutes time frame. Let me change time frame to 15. See, we have already drawn this rally base. So it reached the target. And what is the profit it has given? The second entry has given 5,625 rupees, which is 3.44%. The first entry is 6,300, 3.85%. Second entry is 5,625, which is 3.44. Now combine both. So you got around 12,000 rupees profit, around 12,000. Sorry, around 12,000 rupees profit you got. And what about RR? So around 7% RR you got. Sorry, ROI, not RR, ROI. Your return on the investment, you got around 7%, both together. So finally we achieved what we are supposed to get during the intraday by combining these two trades. Sometimes you have to do such kind of analysis during the intraday. When you will do such kind of analysis, if you are observing in a proper way, if you are observing the price actions, every movement that is happening on the charts, if you observe properly, finding the hidden zones, and identifying the leg out candles, even though the structure is not proper, with the help of the follow through candle. And such kind of zones are giving good results. Now it is the time for you to learn all these concepts, especially those who completed the supply demand zone price action course. I know some of you have already learned supply demand zone price action course few years back. You've been practicing for the last few years, maybe last 3 years, 4 years, 5 years. Some of you people are using demand and supply zones, but still you are not aware of these concepts, I'm sure. So you have to observe, you have to understand these concepts. You learned the old supply demand zone price action theory. Now you have to understand the modern supply demand zone price action theory. Anyway, all these concepts in detail I will be covering in our course. Probably in the third phase of our training program you will be learning with more and more examples. Already I am giving you few examples here. So this is an early learning for the people who already learned supply demand zone price action theory. Those who are currently attending supply demand zone price action course, probably it will take some more time for you to understand all these points. You just listen and leave it. Later on you will understand these concepts in a much better way, very soon. Probably in another 2 weeks time period, you will be in a position to understand all these concepts. But what you have to do, bookmark these videos so that you can repeat this video discussion again after 2 weeks. That's why everyday analysis is very, very important. In every day, in each day, or I can say most of the days, I am explaining some theme during the analysis part. Those themes are not only important for the newly learning people, they are important for people who are trading for the last 4 or 5 years by using supply demand zone price action. Those people also not aware. That's why every day I am spending these many hours of time for explaining all these concepts in detail. See how we got to successful trades today. In normal way of doing analysis, I am sure today you would have rejected this trade. Of course, we got other trades, easy trades we got in the other stocks from this yesterday's list. But sometimes that a particular trading day, you may not find any stocks except a stock having such kind of analysis. That day you should not sit simply. By doing such kind of complex analysis, still you will be in a position to grab some money or earn some profits. So this is about State Bank of India, but remember the point, especially the leg out that is not great, but having follow through candle. If you remember that point, many times you get good profits. Many of my trades are successful mainly because of that. So people may think like maybe I am compromising in drawing the zone, but that is not the case. Always I look for the follow through candle if the leg out is not great. But today you are learning It is a new point for you. Okay, now let us look into the other trades. SBIN we already just completed. Now let us look into one by one. IPCL up, we got a good profit today. Because this is a daily zone, first let us go to daily time frame. Okay, this is the zone identified by our scanner. That means NeoStock software. We have a rally, base, again a rally. See, the leg out is not looking great. Generally, you may feel it is also looking like a base candle. But our scanner identified. How it identified? Because it has seen all the other scenarios. Moreover, the hidden body is added to this candle from previous close to this, it added, and then it is having follow through candles. Okay, anyway, we have a high liquidity zone. Inside that, we identified a fresh 75-minute zone. So this is a rally candle. At the hidden body, you get the complete rally. And then we have a base. This is exactly at the proximal line. Proximal, that means the high of the zone. This 75 minutes, again we have a rally candle. Now inside we have fine tuned to 15, again 15 fine tuned to 5 minutes. And that 5 minutes area, today we got the entry. And this is the 15-minute zone. Of course, this is also a 75-minute zone. Inside this, we have 15-minute zone. And reached the target. Okay, here we have a drop candle, base candle, and a rally candle. Now you will get clarity. We have a drop, we have base and rally. So that means from here to here, you can draw the zones. So inside this 15-minute zone, we identified this 5-minute zone. So now let me go to the 5 minutes time frame. See, we have a drop candle and we have two base candles and then we have a leg-in. But leg-in is completely there inside this. So follow through candle, confirm it. So we have two follow through candles. Or even if you want to consider this entire candle part of the base, still we have a leg out candle. But because it is looking like a small leg out, to accept this or not to accept, you look into the next candle. Next candle follow through candle is there. That way you can confirm. And this is the way we identified this base. Mostly if you go to lower time frames like 3 minutes or 1 minute, inside you will find an excellent origin where the entire move started. And today what happened? Prices entered into this area and after that see how price pushed up. See, today from here prices came down. Today 7th, right? Came down. And finally when we got the entry at 1 o'clock, 5 minutes we got the entry. By this time already other stock has given profits for us. You would have exited the trade from the other stocks. Because they gave profits before 1 o'clock. Now 1 o'clock again we got opportunity in this stock. See, today we got opportunities on multiple stocks. 2 entries in State Bank of India. Again another entry in IPCL Lab at 1 o'clock. Same investment you have used, but you got multiple trade opportunities and multiple profits. Okay, what is our target? That is 15 minutes. Always we look for 15 minutes supply zone. Here we have a 15-minute supply zone. We have a rally, 2 base candles and a drop. And finally, even the supply zone is also broken. The next supply zone again it reached the 15 minutes. We have a drop candle, base candles and drop candle. But anyway, we always look for the first one. So it reached our target. That itself is a very good return. IPCL lab, we got a profit of 9,750 rupees, which is 7.47% return on the investment. And then when it 1 o'clock it gave the entry, and when it reached the target, at 1:45 it reached the target in just 45 minutes. Duration, we got entry and we got the target. That means in 45 minutes, it has given 7.47 return on the investment for one future lot. So this is about IPCL lab. And next one is Dalmia Bharat. We didn't get the entry today. Let us go to daily time frame. So we have drawn everything 75 minutes. Inside 75 minutes, I have drawn the 15 minutes. So prices didn't enter into this area today. Narrowly missed. State Bank of India, we already discussed at the beginning for a complex for today's theme, how to analyze in a complex way. I mean, how to understand complex scenarios. So the next one is Wipro. Wipro also did not reach. So I have already drawn and fine-tuned to. And Wipro is a 75 minute zone. Is it 75 or daily? Inside the daily 75 minutes. I'm sorry. Wipro is also a daily zone. Inside we have this 75 minutes. Inside 75 minutes, 15 and further 15 fine-tuned to 5 minutes level. And next one, Bajaj Auto. Again, another successful trade we got in Bajaj Auto. This is a long entry. Sorry, this is a short entry, not long. It's my mistake. This is a 75 minute zone, high liquidity zone. We have a drop, 4 base candles, and then we have a drop. But here, you have to do your analysis carefully. Otherwise, your stop loss might have been hit. Where in 15 minutes time frame zones. Let us go to 15 minutes. See here, we have a rally candle, a base candle, and a drop candle. Because the drop candle structure is not, no doubt this is a ERC candle. But body is not great. You are looking for confirmation, one more candle, follow through candle. Okay. Anyway, that is okay. But here, what is the question? We have again another leg candle followed by 2 base candles and then followed by a leg out candle with a gap. So generally what you do, you feel like to take a zone here. Let me draw the zone. This is a 15 minute zone. You feel like to take an entry here in this zone, not the above one. But actually we got an entry in the above one. So why I rejected this one? Simple, go to 5 minutes. The structure is ugly structure. Maybe ugly is not the right word. A bad structure. Why bad structure? Simple. We have a drop candle and then base candles. Count 1, 2, 3, 4, 5, 6, 7. 7 base candles. Do you accept? Anything above 6 is not acceptable zone. So it is not an acceptable zone. Such kind of zones will be broken easily. Sometimes even 6 candles also I don't accept sometimes. But this is beyond that 7 candles. Sorry. See, today that zone is broken easily. This zone is broken. And then where is the actual order flow? Let me delete this. Here we have an actual order flow. See the rejection. After the rejection, prices didn't enter into this zone at all. Sometime prices were moving here. It is a testing time during this. How much time? From 12 o'clock to until 2:25 or 2:35. Almost 1.5 hours is a testing period. Testing for your patience. Now at 2, from 235 candle onwards or 240 candle onwards, see, within 1, 2, 3, fourth candle it gave you the return. It reached our 15 minutes target zone. This is the best example for the patience. How a trader having good patience would have got a good return today. Those who are not having patience, I am sure, definitely they would have exited here. Somewhere here they exited. Still, they also got profit, but minimal profit. Very, very minimal profit. I'm not saying exiting here is a. I'm not saying exiting here is a bad choice. I'm not saying that, because during the intraday your time interval is also very important. But what I'm trying to say is sometimes patience will give you the results. That point I want to convey. Here I am not supporting anybody who exited here or who not exited. I'm not supporting anyone. It is all depending on our individual psychology. The trade reflects. But those who are having patience, definitely they got result. That is what I want to convey. But anyway, it reached our target. That is more important for us. How our high liquidity zones are working. For that point of view, Bajaj Auto has given 8,525 rupees profit, which is 6.25% return on the investment. So it reached our average intraday return, the 6.1%. This is 6.25%. So this is about Bajaj Auto. And Marico, it did not reach the entry. Instead, prices came down. So we didn't get the entry in this zone. And the next one is Jindal Steel. We are maintaining in our watch list. Why we are maintaining? Because Jindal Steel is moving between high liquidity demand zone and supply zone. That's why we kept, because such kind of zones most of the times will give multiple opportunities. So today also it gave an opportunity. It entered into its entry area and then it reached the target. Why here again we identified a fresh 75-minute zone. Let me show you let me go to the 75 minutes time frame. See, it is a newly created 75 minutes. When on last Friday this zone is created, we have a rally candle, we have a base candle, we have a drop candle. This is a very big zone. Why it is a big zone? Because we always consider the highest of these three candles. Which three? Leg in, base, leg out. Whichever is having high, that is zone high. That is our stop loss. Because the risk is very high, what you have to do? You have to go to 15 minutes time frame. There you need to fine tune. Here we have a drop and then we have a base. You can consider this small candle is a base candle. Again we have a drop candle. This entire area. So in this area at the distal line of 15 minutes, I identified a 5-minute zone. Let me go to the 5-minute zone. So here we identified we have a drop candle, we have 3 base candles, again a drop candle. You may feel this drop is not a very convincing because you are saying by comparing the previous very like big candle. Because most of the time what happens, the previous candles will change our view. Now you see, this is a big candle. These are all leg candles. The moment you got a very big candle, now the size is changed. This is the problem with the visual representation of the charts, charting software. Even if you get any doubt, we have follow-through candles. See all these follow-through candles. Okay, we have drawn the base inside the 15 minutes. That is at the distal line of the 15-minute zone. See today, prices reached into this zone and then finally it entered into 15 minutes. In 10 minutes, this entire trade is finished. 925 candle, it reached that. This is the 915 candle. This is 920 candle and 925 candle. Maybe in 15 minutes, the entire trade is finished. Let me go to 15-minute zone. See here, we have a drop and we have base and then we have a, so you can also keep like this. This also you can consider as a leg out and follow through candle. You would have got even more reward, but anyway, I have calculated up to this. And Jindal Steel has given 14,062 rupees profit, which is 7.19% return on the investment. Jindal Steel is not from our yesterday's list, but it is from our watch list. We've been maintaining this stock in our watch list for the last 1 week or more than a week. So Jindal Steel has given another opportunity for us today. So this is about the stock analysis part. Now let us generate demand and supply zones for daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So 4 stocks are filtered which are near to the daily demand zone. And we have one high liquidity zone, Tata Steel, which is a fresh zone. But remember, it is high on the curve. Most of the time, the zones which are high on the curve should be used for intraday purpose only. So that's why you should be very careful with this stock. But the advantage is trend is very strong. Monthly is uptrend, weekly is uptrend, even daily is also uptrend. Now let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. Let us filter the stocks. 8 stocks are filtered. Dalmia Bharat is still in the list, high liquidity zone. And Wipro is in the high liquidity zone because both these stocks are there in our yesterday's list also. So they carry forwarded from yesterday and still both are near to the daily high liquidity supply zones. Let's go back. For entry time frame is daily. Let us filter the stocks where price closed inside daily demand zone. And this is the filtered list. These 11 stocks are closed inside the daily demand zone. So let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. So this is a list. I'll keep on scrolling this list down. Any stock you want to refer, just pause the video. So total 48 stocks are closed inside daily supply zone. So let's go back. Entry time frame is daily. Let us find the stocks which are tested the daily demand zones. So today 11 daily demand zones are tested. So let's go back. Entry time frame is daily. Let us find the tested daily supply zones. So 9 supply zones are tested today. Let's go back. Entry time frame is daily. Let us find the stocks having newly created demand zones. So 16 stocks are filtered. These 16 stocks are having newly created daily demand zones. So let's go back. Entry time frame is daily. Let us find the stocks having newly created supply zones. So these 5 stocks are having newly created supply zones. So this is the filtered list for daily time frame. Now I will generate demand and supply zones for all these stocks. So let us generate demand and supply zones for all the stocks on daily time frame without any filters. This is for your reference purpose. I keep on scrolling this list down. Whichever the stock you want to refer, there you please pause the video. So this is about the complete list of the stocks filtered from our software. Now let us generate demand and supply zones for all the time frames. So entry time frame is yearly. Let us find the stocks near to the yearly demand zone. No stocks are filtered. Entry time frame yearly. Let us find the stocks near to the yearly supply zone. No stocks are filtered. Let's go back. Now entry time frame is half yearly. Let us find the stocks near to the half yearly demand zone. So one stock is near to the half yearly demand zone. Let's go back. Entry time frame is half yearly. Let us find the stocks near to the half yearly supply zone. One stock is filtered. Let's go back. Entry time frame is quarterly. Entry time frame is quarterly. Let us find the stocks near to the quarterly demand zone. So one stock is near to the quarterly demand zone, but it is a few hours demand zone. So entry time frame is quarterly. Let us find the stocks near to quarterly supply zone. So one stock is filtered. So let's go back. Now entry time frame is monthly. Let us find the stocks near to the monthly demand zone. No stocks are there. For monthly time frame, let us find the stocks near to monthly supply zone. So two stocks are filtered near to the monthly supply zone. So let's go back. Now entry time frame is weekly. Let us find the stocks near to the weekly demand zone. So one stock is near to the weekly demand zone. So let's go back. Entry time frame is weekly. Let us find the stock near to the weekly supply zone. 7 stocks are filtered near to the weekly supply zone. Let's go back. Daily we already generated and 125 minutes. So entry time frame is 125 minutes. Let us find the stocks near to the 125 minutes demand zone. So these 9 stocks are filtered. Let's go back. Entry time frame is 125 minutes. Let us find the stocks which are near to the 125 minute supply zone. So these 12 stocks are near to the 125 minute supply zone. Let's go back. So entry time frame is 75 minutes. Let us find the stocks near to the 75 minutes demand zone. So 7 stocks are filtered. Any high liquidity demand zones? Yeah, only one high liquidity demand zone we identified, that is Fidelity Industries. This is again high on the curve. But ITF and LTF trends are supporting. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near to the 75 minute supply zone. So 12 stocks are filtered. Any high liquidity supply zones? We have Burger Paint. Previously also once we got an entry in this stock, but it is already tested 7 times. So you should be very careful. You should look for fresh zones. I mean, because this is 75, you have to look for fresh 15-minute zone inside this, or a deep entry. Petronet, but it is already pierced, so we don't look into the pierced zones. That's it. So let's go back. 25 minutes. Entry time frame is 25 minutes. Let us find the stocks near to the 25 minutes demand zone. So 9 stocks are filtered near to the 25 minutes demand zone. So let's go back. Entry time frame is 25 minutes. Let us find the stocks near to the 25 minute supply zone. So 7 stocks are filtered near to the 25 minute supply zone. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near to the 15 minutes demand zone. So 2 stocks are filtered near to the 15 minutes demand zone. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near to the 15 minute supply zone. So these 8 stocks are filtered. So let's go back. Entry time frame is 5 minutes. Let us find the stocks near to the 5 minutes demand zone. So 5 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near to the 5 minute supply zone. So these 12 stocks are near to the 5 minute supply zone. So this is about the filtered list. I hope this information is useful to you for your further analysis. So let us all meet again in our next video. Thank you.